Community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted a chart of the Treasury bonds here, folks, and you can see here, we were looking at this on this hourly chart, and you could see the 133 level. That was the big ABCD to the upside. And what we're watching for today is to see if the market in the bonds is going to hold. Hold on one second, folks. We're at such a critical level here in the market. I'm going to do this bond, and then we're going to switch over and watch what's going on, because I'll give you an idea of what I look at when I'm seeing some of these things. So bear with me here one second, and I want to put another chart up to show you where we are. Within the context of the ABCD, because we've already completed this here in the Treasury bonds a little while ago, and they've already started to move up from this level. But there was the ABCD pattern that we're looking at, right at the 382 retracement. Okay, so we're at a real critical moment here, and this gives us a chance to show whether some of this stuff works or not, and we're going to pay close attention to it here. So the first thing we're going to do now is we are going to come up and we're going to take a look at the market the way that it really is. And hold on, I want to show you where we are here. That's a good sign. Hold on one second here, boys and girls. Give me a second here. All right, early this morning, we were having a very strong rally in the stock market. Let me show you this rally. If you'll remember, folks, yesterday we were looking at the Russell index. If you'll remember, we were watching the Russell make a bottom. I'm using the Russell because it's so simple and it's done everything that you could possibly ask, no variations at all. I mean, you can do the work on the S&P yourself, you can do the work on the Dow Jones, all the stuff that you want. But look at this, this is the ABCD over a 3-day period. Hold on, folks. So something big is happening that makes this cowboy happy. Hold on one second. I got to turn the what we call the, I have to turn the limit minders off, okay, because we're starting to move down here. Anyway, let's get up here and take a quick look here at this. You can see that we made the ABCD pattern now, and then you notice that we were looking for a 382 retracement to come in on the Russell. Okay, now I'm just going to show, and I haven't made this up, honest to goodness. This is exactly what's been happening, so bear with me here as we take a quick look and update this puppy, because I've got so many of them on here now, folks, that it's just too much. And I think this is the one. Yeah, here it is. Here's the Russell today. Let me get it up here and see where it is. Okay, all right. Folks, I've been doing 3,900 of these shows over the past 17 years, and this one's going to be a tough one for me because this old cowboy is flat out worn out. Going to take a day off tomorrow. I have to. I'm just really tired. You can make a couple bucks, but if you don't live to enjoy it, it ain't worth a damn hoot. Anyway, the high today was exactly to the high that we made back here 3 days ago before we knew there was a problem somewhere. The market came down, rallied up. Now the S&P's rallied up to the 50% level. The NASDAQ has gone to the 78% level. But that's what we're watching. So when that Russell was hitting the 382, what I was doing, I was going in and looking at the Dow Jones. I'm sorry, folks. In fact, I was chatting with someone today, and he said to me, he said, we've been friends for 30 years. He says, you've never been rude to me before. I apologize. Anyway, this is what I was looking at this morning when we were up near that area here at 3960 in the E-mini S&P. And as you can see, we've had a sell-off, and we're at a real critical level right now. Let's just get it up here so I can point it out to you right here, because that's what the beepers were going off just a minute ago. Hold on one second here. When they hit that 3948 level. If you have any questions, folks, go ahead and give me a call, 877-927-6648. So that's where we are. We're down into this area right now. So it's got about another 20 minutes. And if we start to rally in here, this is going to be the key here. Because if all we get is a little dead cat bounce in here, we're going to see a reversal today. And with the bonds acting the way they're doing, this could be a pretty significant one. I don't know, but we'll do one at a time as we go through. I've got some other stocks that I want you to see here. Now, when you have a collapse, well, and it's pretty much been a collapse in the banking index. But let's take a look at Wells Fargo Bank, and get this up here. Here's Wells Fargo Bank. We had the big break in the market. You see, it's a pretty substantial break. Today's high. Yeah, I see it, Johnny. Yeah, it's 382 is what it is. Sit down and shut up, you little squirt. Sorry. I've reached the punchy level, folks, so I'm going to make it through this show, but I am taking tomorrow off. So cancel me for tomorrow. I don't care if the market goes up or down tomorrow. I've got to take a break. It's just been really funny. Okay, someone asked another one to take a look at a real good bank, and that is J.P. Morgan. So give me a second here, and I'll get the oh, this is really hilarious. I have J.P. Morgan listed under the Russell. So let's move on here. Maybe we can see J.P. Morgan here. Here, let's do Goldman Sachs here because this is an interesting one. It's acting weaker than all of the bank stocks, folks. Well, they're all pretty much equal, but you can see here with Goldman Sachs, all we've been able to do today was make a 382 retracement of the previous day's high. That's all we were doing with Goldman Sachs as far as that's going on. So this market someone asked, could the market be bullish? Absolutely, folks, because we made that big 39.28 down there. Let's try it again, Larry. 38.28, and we've had a really good rally. We've rallied 140 points, right? Well, we've seen that movie before, haven't we? So that's why we want to be taking a close eye on it. So let's take a look here at the S&P, and I'll show you what we were looking for today as far as a zone to be an area here. Hold on a second there. They're calling me again, boys and girls. I have beepers on to alert me when things hit certain prices. So that's what we just hit the 50% retracement here. And let's just show you where we are right now because we're at the 50% retracement now here. And this is not looking good, folks, because if we don't rally here, that means that we're going down. We're going to be heading towards the exit signs here pretty soon. You can see we're at the 50% level right now. And so a little bit lower. I've got to change my alerts, so bear with me here. And it'll get me down, put it down here to the 61% retracement, which is, believe it or not, 39.29. And folks, that is 100 handles higher than the low that we made. That's how big that son of a gun is. So that's a pretty big one. So let's remind ourselves of that. I got to do one other thing because there's something else that's very important. I'm walking and chewing gum at the same time. Oh, we're at the real critical level now, folks. This has got to hold because we're in time and price are together, and it's supposed to be working. We're going to take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, back. I wanted to show you because we were at such a critical level here. I'm just going to show it to you right now. We just hit it spot on, and I want to get it up here. So bear with me here 1 second. Hopefully we'll see what's going on. And so far, so good, as they say, is a man that jumped out of the window, is waiting for the bottom. Okay, here is the move. Today, just a few minutes ago, we just hit the exact 382 there in the S&P. That was off the low that we made down here at 39 something. You can see the ABCD pattern up in here. We just made the 382. We go below this, we should get a nice rally in here. We're going to see what it is. If we go below that, that's telling us that we're going to have something pretty significant to the downside. By the way, if you have any questions or anything, just call in Al and he'll get you to me, 877-927-6648. So hold on 1 second. I want to make sure I get this on 3136. Hold on here. Hold on, boys and girls. I have to do something. I got to take care of business, as they say in the trade. And I want to get this up here, which would be right there. 3149. Okay, that's good. Okay, because I started out with a terrible error today, folks. I hit a buy-sell error. Whenever I do that, it just literally upsets the bejeebies out of me, but that's neither here. That's neither here nor there. Okay, let's cover a couple others, folks. Let me just give you an example, folks. We've moved 1.5 points in bonds here since that 382 just hit. There, you see when the bonds take off, you see what happens to the stock. This is not over, folks. This is certainly not over under any stretch of the imagination. I will show you. Let me get the bond one up because that's been the leader of the pack here for quite some time in here. Hold on a second. And 57. Oh dear, what do I do now? 31.21. Hold on a second. I want to get this weekly bond chart up because this is where I think we're going. Oh dear. Just a second here. That's not the weekly. The weekly is right here. Okay, here's where I think we're going. Well, let me just give me some. Bear with me, folks. This is nothing that I don't want to make any really bad guffaws in here. So, this is the bonds over the past year and a half. Those of you that have been along with the old trade, what you see, folks, during that time know how bearish I was, especially when they were telling us about the zero interest rates. Gotta love that one. Now, we've had a big move down, and from all I did was I took the high at 0.1 of the 135 pattern. That's when we were super bearish, and also bearish here, and the bottom came in here. Now we're having an ABCD correction. This is 139. If the market gets really nuts, we could go even higher than that, but I think that's what we're looking at right now. All we did today was make a tiny bit below the 382 retracement. That's the one I posted to earlier. That came in at 129.20. We got to 129.9 or something like 129.09. Now we're trading 130.20. So the buying is coming back into the market as we speak here today. So that's where we're at. We're at a real critical level. Is this just a 2-day correction in a bear market? I don't know the answer to that, but it certainly does look like it, doesn't it? And that's really what we're paying attention to. We just had a little bit of a bounce off the 382. If we start going through that, which we're already starting to do, that tells us that we're getting ready to go lower, is what it looks like. I don't see any reason why it can't. And the bonds are, they're at 30.20. Let's just look at this here on this small thing. You're going to see it really clearly. Just a second here. I'll get it. All right, just give me a second. I got to do it with a 8-minute chart because it's moving so fast that you don't really, you can see your, hold on, Larry, there you go. All right, let's get her up here so we can see, everybody can see it. Hold on. There it is right there. Let me draw in the pattern for you so we can all see it together. And apologize for my voice, folks. It's springtime in the Rockies here, so the old Palo Verdes are in bloom. Let's get this up here and you'll be able to see it here. And there's where we are. So we hit it. Now, if you get below that, then the stocks are going to rally like heck, is my guess. This is nothing more than a day-and-a-half correction in a roaring bull market. Stopped right at the 382 pretty much. And so if we take off from here, then all bets are off, and we're probably going to go down, quite a bit lower on the other side. So let's wait and see, what happens with that, and we'll go from that level. But right now is where the market should rally from, based on what the AI is saying, and also from the fact that what we're looking at is a place for the market to. Hold on, oh boy, just a second. Got a little frog in my throat, folks, so bear with me here. I don't want the frog to get too far off the beaten path here. Okay, we're starting to have a little bit of a rally here, so that's it. Oh, made another error. Oh, son of a gun. Just a second, folks. Time out. I got to take care of business here. All right, let's rest up a little bit. Let's move over and talk a little bit. We know if we start making lows below this 382 retracement here in the S&P at 39.22 now, that is going to be very, very bearish. I know it's only 7 points away, but this stuff is so accurate that, well, it's pretty accurate. Not so accurate, but pretty accurate. Anyway, that's what we're looking at. All right, let's forget that one. Got that error taken care of. $50, no big deal. All right, now here was another one that we were watching really closely last night, and that was the crude oil. We had the same thing in crude oil. I'll bring this up here to show you if you like 382 patterns, and we certainly do. The 382 on the crude oil came in at 74.21. As you can see, that's what we were looking for to happen in the crude oil. Of course, crude oil now is way down here at around the 72 level. So now that's a pretty substantial move, for a small amount. But I think if we get up and show you, this is one from an hour or so ago, what was happening with it. But the thing is, folks, you can do these things yourself. I've had several people ask me, because I talked about the AI program. This is nothing more than a prediction of what happened 2 days ago. Now, this is Tuesday. So you don't count Monday. You have to go back to Friday and see where the key highs and lows were on Friday. So you go Friday, skip Monday, go to Tuesday. You skip a day. Wednesdays, okay? Wednesdays, you'll go to Mondays, okay? And Thursdays, you'll go skip Friday, you'll go to Monday. And it's really quite amazing. Now, we did this with a computer MIPS computer, we did hundreds and hundreds of thousands of these to prove that these things, do they work all the time? Heck no, they don't work all the time, but they work part of the time. That's what those whole key times are for the euro. We use the euro in the Floor Trader's Handbook to show you how this thing works. It's not that difficult, but there's a lot of work involved with it. And when you pay $6,000 for a computer and you wear it out in 2 years and go buy another one, you better use it to its best advantage. So I hope that is a help to you to look, see what we're doing here with these things here this morning. But this is the key level that we're paying attention to right now. So it's acting relatively well, given the fact that we've had a pretty good bottom. The bottom should be in right now, and if we start making new lows after this in the stock indices below 39.22, there's something seriously wrong, and we will close lower and substantially lower. If you have any questions, 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, let's get this up here and take a look at it, and I'll show you what I was upset with as I tried to buy it down there. What I did was, I hit the sell button, so I had to reverse. And I got out of it okay, but then my buy order was so far below. And when you're dealing with 5 points in the S&P, that's a lot. And anyway, this is what's happening. There's a low. There's a 382 retracement on the way back at 39.40, and we start getting above that. But here's where in another hour, if we're down in this zone right here, if we make any new lows now below this low we made at 39.22, that's incredibly bearish. Now, at the exact time this was hitting the 382 down there at 39.21, I already showed you that on the daily. The exact time that was happening, I want to show you what else was happening. Let me come over here, and you'll be able to see it very, very clearly. And this is it right here. And this is a treasury. This is a market that's 6 or 7 times bigger than the S&P here. And if you take a look at this, look what the bonds were doing exactly when the rally took off in the S&P. See, bonds making a high here exactly at 382. And then, by golly, so far it hasn't got above that. Now, if we start getting above this in the bonds after making this pattern, there's where the problem lies. So that's a big 10-4 of what we're looking at here today as we're watching these things, okay? Now, I've had a couple of questions that happened here while we were gone, and we're going to bring these up here in just a second here. Someone asked me about resend the chart of the S&P from yesterday making the bottom. Okay, I will be happy to do that. And this is the ABCD. And this, remember, this was also, if you went to look at the daily number was also there at 38.39. And that's what we hit. And we hit this twice. And then, of course, we had the monster rally of 160 points off of the bottom. So, and remember, we've seen these 160, 150-point rallies many, many times before. Folks, keep an eye on the banking sector, because if these banks do not rally here the next day or two, I mean substantial rallies, 10, 15, 20%, because they got hit really bad. They're doing basically nothing today. And that in itself is not a good sign. So we got to watch it. Now, there is hope. Let me show you, and I showed you let me show you Goldman Sachs daily, and I'll show you why there's hope. Because, Warren Buffett says when there's blood in the streets, that's when you want to buy. Well, there's blood in the banking index for sure. There's a big ABC Gartley right here. You see, we held relatively well with Goldman Sachs here. After 13 days up, 19 days down? But what we're looking at now is if we take a look at Goldman Sachs here, on a shorter term basis. Let me get this up here. I know I did it because I think it's important enough to see the fact that Goldman Sachs is right here. There it is. Here's Goldman Sachs over the past 2 weeks. It's had a heck of a retracement from 379 down to 315. And get the chart up so we'll be able to see it right here. Wow, we're in the second half of the show already. God, time goes when you're having fun. Okay, there's where you are. All you could do is make a 382 off the previous day's high. Now, Wells Fargo, it made a 382 off of that high right back here before the big break. So that's the difference between the two firms. I know Meta Corporation or Flag, what's its name? Facebook is up quite a bit today because they released 10,000 employees, and that's a bullish sign, I guess, because that means their earnings will be better here. So now let's move over and talk a little bit about the gold market, because this is also very important. What we did in gold is exactly what we did in the Treasury bonds. And let's get it up here, and I'll show you. This is what I do in the videos each night when I send them out, folks, is to try to alert you to these prices. Okay, now here is the big ABCD right at the 382 on Friday where we went short. And it's 1873. I said put a stop at 1877. It opened at 1877 Sunday night and took off and ran all the way up here. Now the 382 of that whole move, I'm talking about the whole move, folks, from right here where it exploded. Remember, it came down and it filled that gap almost. It missed it by $1. That 382 came right here at 39.03, and excuse me, 19.03, and the low in the gold was 19.02, and we're trading about $12, $15 higher than that right now. So there's another one that's falling. Now the key is if we break below that number, and if we break below that number, that's when all bets are off. That's when you've got to be able to say, what's going on. We've had a $1.50 move in silver in just the last few days. So, and it hasn't given any of it back, regardless of what the news on the euro or any of that other stuff is. That doesn't make any difference. We've already seen some of that happen. So I'm just following the charts, folks. I listen to, what the folks are telling me on the news. Well, somebody will, drop me a note or something like that. But, it goes through one ear, not the other, unless it's it's related to what the market. I want to see what the market does, folks. That's all I really want to do. I want to see that it can prove to me that we're okay. That's the main thing. It's okay. Someone asked about the U.S. dollar. The U.S. dollar, we almost made the 382. We remember the resistance that we had in the euro. I haven't even looked. I haven't even looked at the euro so far today. Hold on one second. I've got to put my beeper in here on the S&P, because we get that 382 here in the next little bit. I want to be able to see what's going to happen with that. So let's move on here to the next one that we have to take a look at. Crude oil keeps going. Crude oil 72.5 now, folks. That's not a bad move from the bottom down in there. So we'll pay pretty close attention to that also. Okay, I got to do that. Just give me one other second, folks. I got to fix an order here. Otherwise, I'm not going to be a happy camper. And you want to keep me happy, as they say in the trade. Hold on here. I'm happy anyway, no matter what. So let's just move this on here, and we'll see what's happening. And I got to put that in there. Looking good, Billy Ray. Feeling good, Lewis. I just got to get this in there at 23. Yep. Okay, 23.10. All right. And this is it. I haven't, after the error that I made this morning, I backed off a little bit. Had such a nice run in some of these things that I don't want to, too much off the path. Someone's asking me what I'm doing. What I'm doing, folks, is here. I'll show you what it is. It's quite simple. Just here. I have to work here during the times. Thank God they let me work, when I'm here. But this is what I want to be seeing here. Okay. And this is probably simple enough. I know I'm doing short-term trading, but I'm mixing short-term trading with what I think is going to be happening. So here, let me give you the first chart up here, and we'll show you what I'm doing here, okay? Okay, here is, just forget the green line, okay? Forget the green line, don't mean anything, because right now, after this, it doesn't like, this was the 382 retracement of the whole move from way back down there. That's 100 and some points, okay? How much? 80 points. So that was the exact 382. I showed you that on the daily. Now, there's the 382 that I'm looking at. If we don't get any higher than this 382, I covered down here. I should have covered there. I end up covering it here. But and I got a lower order to sell it if it goes below there, just in case. But if we get to this level by the end of the show, which is in 22 minutes, and we're not going to be above this level, which is 39.40, something is wrong. Okay, that means something is wrong. Below here, something seriously wrong. We'll be right back. 877-927-6648. Billy Ray Valentine, Capricorn.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and someone's asked me to review that bond thing, and I'll do that right now. Hold on, just get up here just a second here. Now, remember, the stuff that I'm looking at here is short-term, but the patterns are the same, short-term or long-term. It's just the amount of volatility and margin and stuff. There's the ABCD in the bonds up here. You notice there were two major numbers there, a 127 and 1.618 expansion, plus you had the ABCD pattern right there. That's why we got the pullback. So the pullback, the first thing we're doing, just like we were watching S&P, we wanted to see what the pullback was. The pullback was supposed to come down to the 382 retracement of that whole move. So we're switching over to that same thing, only what I've done is I've taken all the other patterns out so you can see it clearly, and you bring it up here and take a look at it. And there's where you are right now as you came down to this level, and you've rallied a little more than a full point. We got up to 39.30. We stopped at 39.20, 130.20. If we get above 130.20, which was that 382 retracement, that's telling us that, yep, this thing is getting ready to run, but it hasn't done that as of yet. That doesn't mean that it can't. It just means that it might. That's really, these patterns basically do two things, folks. They repeat over and over again. We've seen that with Mandelbrot, Gartley, all the other things. We see the ABCDs. They repeat over and over again. That's all the market ever does is repeat. And it does this with regularity that can be predicted within limits. Andrew Lowe proved that in his book, The Non-Random Walk Down Wall Street. So the thing is, you're only going to be right if you're really good 50, 60% of the time, but you're making 1.5 to 2 times on each trade you're doing, you're still going to make a buck. I mean, sometimes, a pretty serious buck. So remind ourselves that's what we're paying very, 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 very close attention to. Okay, you just can't mean very much about it. Let me get back here. Someone asked, oh dear, there's a problem here. Someone asked me to review this Treasury bond thing from way back in 2008. Remember, last time we had a banking crisis, which was bigger than this one. This was Mass Mutual. Get it up here so you can take a look at it. You'll see here was the banking crisis right here. The bonds actually topped during that time, had a big sell-off, and then had the huge rally as the 2008 bubble went into our low of March the 9th, if you remember, of March the 5th of 2009. So just you got to follow the charts, folks. The news that's out there will drive you absolute batty. I mean, it really will. There's nothing else you can do about it. So it's not really a problem. So we'll look and see how some of these things are moving. Well, we did stop at the 382. It looks like at 39.40 in the S&P. And so we start getting lower than that 39.20, folks. That's going to be a break, and that means, where there's serious problems going on with this thing. This thing does not disappear with the wave of a wand. It just does not happen. That's the main thing, and that's why I am a technician. So hope that helps. Okay, now someone asked about the price of someone, and I want to get it up here. It's in the newsletter, and I want to bring it to your attention here. So give me 1 second, and I'll pull it up, and we'll be happy to answer the question if we can. And that is yesterday was the 13th, and that is our good friend Dr. Copper. And as we take a look at this, you'll see copper has had one heck of a rally, and not only that, folks. When the stock market collapsed, copper did not. Look at that. Copper has held up incredibly well. We're looking for it to get down to that $4 level, and it's got a pretty good chance in here. But there, in fact, that's a 382 off the whole move if it gets there. So there's nothing wrong with copper. Now, the question that someone asked, is that equated to the war? Those are questions beyond my pay grade, folks. I really don't know how to answer that question. I really don't. That's all basically I can tell you. But I did want, someone asked one other question about the trade that we had in the wheat, where we didn't handle it as well as we could, but we gave the folks some ideas of what was happening with wheat, and I'll get it up here so you'll take a look at it. This is what we call when my frustration index reached a little bit over 100, but it always stays at about 99. Here is the wheat. There was the low right there in the wheat market right there on Sunday, folks. Right there at the old, this was the 1.618 expansion, 3 drives to a bottom on the daily. All we did now is we go down to a 15-minute chart, and you can see the 135 pattern. Look how perfectly it lines up, folks. Higher bottoms, right? This one is 61% of that one, and 50% of that one, and now, we've gone and continue to go a little bit higher. So, and you can have the right pattern, but if you don't put the orders in properly, folks, it doesn't make a hoot, because that gets you into a situation that you got to make decisions based on something that you made an error, and I made an error with that wheat, and I paid the price. Not a big price, but, I didn't act properly with it, and by golly, that's what we were looking at. So let's just get in here and get the next one out here to take a look at. All right, folks, now here is the S&P. Now, this is the daily, and the person asked the question, why haven't we reached this level of 37.75? Well, I don't know if we're going to get there or not, but all I know is the market is still going down. How do I know that? The retracements so far have been doing, especially in the Russell, my gosh, that was absolutely perfectly. Now, the S&P went to the 50%, the NASDAQ went to 78, and they're all backing off a little bit from that level. So those are things that we have to wait and see if, in fact, that is going to be the case. So we're back to how low we got here so far? We got down to 29, 28, 25 or something like that. We got to hold in here, folks, because if we start getting below that 329 area, that means that that little 382 rally that we had right up there is really significant. That means we're going to be heading down to below 3,900 today on the close, and the close below 3,900 on this would be, very, 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 very troublesome. Okay, very troublesome. And here's the reason, and I'm going to bring it up again. And I'm giving you my opinion, of course. Sometimes it's right, sometimes it's not. But you'll see here we hit the 382 retracement here perfectly, and we rallied to the 382. So you've got a really good game plan now, folks. You made a 382 at 39.41. All right, now we get above 39.41. This has got a real chance, but if we get below this, it'd be like breaking the 382 of this move right here. See, once that 382 is broken, that changes the whole trend. Up, boom, bang, and bing. I mean, remember, you got to think in terms of how long the chart is. If it's a 5-hour chart, you got more room. If it's a 15-minute chart, you got a snapshot of what you're looking at. So I certainly hope that helps. Oh, my goodness, the show's almost over. Boy, as tired as I was, it goes very, very fast. Folks, I'm so lucky to do what I want to do. I'm just blessed, and I really appreciate all of you with the the help and everything that you've given me, and especially the folks at TFNN. Hey, we're going to take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I've been asked what I think the S&P is going to be in the next few months. I posted the chart here of the weekly chart, and as you can see here, our target on this is down there quite a bit lower, right around that 3,200 level. I know it's a long way from where we are right now, but it's telling us from looking at what's happening, it's holding up incredibly well, given to the fact that we've had this banking crisis, if in fact it is true, and sometimes I don't even believe that. But we hit a perfect ABCD yesterday at 38.39. The low was 38.39. We did the same thing in the Russell. I posted that. The same thing in the NASDAQ. And the same thing in the Dow Jones. And we've had a strong rally. The rally went to the 382. So there's the ball game today. We get above that 39.60 level, then we're probably going to go a little bit higher. But until that happens, it looks like we're still going lower. Today's really critical because if we start breaking below 39.20, and that is nothing more than the 382 of the whole move that we talked about a long time ago before it got hit, and hit 39.20, already rallied 21 handles up to the 382 on the upside, which was, my gosh, I'm sounding like a weatherman with all these numbers coming in. The cold front is coming in, followed by a warm front. Rain is possible within the next 12 to 18 months. I'll see how that works out. Anyway, folks, I'm going to try to take tomorrow off. I'm going to check with Tommy to see if I'm able to do that. If not, I'll get a good night's sleep tonight, and I'll be as fresh as can be, and we'll see what's happening. But I'm done for the day. I've got a few orders in there, but the stops are in, and going to have a little bit of fun with it and see what's happened. But anyway, that's what we're looking at today. So live every day in an attitude of gratitude, and may God bless. And make sure that you take care of your neighbors, folks that are out there. By the way, the lady that always comes in, our neighbor, she's moving to Albuquerque to live with her daughter in an assisted living. I love you guys. Live every day in an attitude of gratitude, and may God bless.